All right, welcome, guys. It is Sunday evening, July 27th, in preparation for Monday, July 28th, trading day. We actually the market wizard Tony Saliba, he was the last of the market wizards featured in that Schweiger's book. He does interview Dr. Van Tharp about trading psychology. I'm just going to kind of highlight on the few things that I had highlighted from the first time I read through that book. Um, uh, Two primary rules to successful speculative trading are number one, cut your losses short, and number two, let your profits run. Most people tend to do the opposite of what is required for success. They cut their profits short and they let their losses run. If you think of trading as a game and that a mistake is not following the rules of the game, then it becomes much easier to follow these two rules. You should review your rules at the beginning of the day and review your trading at the end of the day. If you followed your rules, even if you lost money, pat yourself on the back. If you did not follow your rules, then mentally rehearse what you did and give yourself more appropriate choices in the future. Um, when people are stressed, they also tend to be crowd followers. The behavior of others provided a simple example to follow. Crowd followers do not have to make decisions, but crowd following is a sure way to lose money in the markets. Winners typically differ from losers in their attitude about losses. Most people become anxious about losses. Yet successful speculators have learned that an essential ingredient to winning is to make it okay to lose. Since most people in our culture are taught that only winning is acceptable, most investors must change their beliefs about losses to become successful. Um, the two top shooters, for example, believed he's talking about top shooters in archery, or I mean, shooting competitions, army recruits. Two top shooters, for example, believed shooting well is important for my survival. Hunting is fun. Mental rehearsal is important to successful performance. If I miss a shot, it has something to do with my performance. Um, let's see. Generally, I found that top traders believe that money is not important. It is okay to lose in the markets. Trading is a game. Mental rehearsal is important for success. They've won the game before they start. Most people approach trading to make a lot of money, and that is one of the primary reasons that they lose, because money is so important that they have trouble taking losses and letting profits run. In contrast, when you think of trading as a game and play by certain rules, then it becomes much easier to follow those two golden rules. In addition, because of mental rehearsal and extensive planning, top traders have already gone through all the trial and error in their mind before they begin. As a result, they know they are going to win in the long run and that the market and that makes the little setbacks much easier to deal with. All right, I think that's about all I had on Van Tharp. Yep, and then this is the final word from Schweiger of the book here. There is no holy grail to trading success. The methodologies employed by the market wizards cover the entire spectrum from purely technical to purely fundamental and everything in between. The length of time they hold a trade ranges from minutes to years. Although the styles of the traders are very different, many common denominators were evident. One, all those interviewed had a driving desire to become successful traders, in many cases, overcoming significant obstacles to reach their goal. Number two, all reflected confidence that they could continue to win over the long run. Almost invariably, they considered their own trading as the best and safest investment for their own money. Number three, each trader had found a methodology that worked for him and remained true to that approach. It is significant that discipline was the word most frequently mentioned. Number four, the top traders take their trading very seriously. Most devote a substantial amount of their waking hours to the market analysis and trading strategies. Number five, rigid risk control is one of the key elements in a trading strategy of virtually all of these interviewed. Number six, in a variety of ways, many of the traders stress the importance of having the patience to wait for the right trading opportunity to present itself. Number seven, the importance of acting independent of the crowd was a frequent emphasized point. Number eight, all the top traders understand that losing is part of the game. And the last one, number nine, they all love what they are doing. All right, so that's the end of the first Market Wizards book by Jack Schwager. I've got a few more on the shelf in there. Maybe we'll get to those, or maybe we'll change it up and do something else later. But All right, so let's jump into the market analysis here. We had, just as a reminder, these waves that we've had, this wave, and I'm calling them wave one, two, three, and four, and we're on wave five. And then I'm only doing that based on the 5 SMA buys that we had here. So wave one, we moved up 9 days up before we started having some pullback here that set up the 5 SMA buy. Wave two, we moved up 8 days before we started having a pullback for that 5 SMA buy. Wave three, we moved up 7 days before that pullback. Wave four here, we made it up 9 days before we had that pullback for the 5 SMA buy. And now we're on this, what I'm calling wave five. We've had, as of the close on Friday, we've had 7 days up. Looks like we had a nice gap up in the overnight markets. I had this 6450 kind of zone marked off, and it looked like we gapped up to opened at 50, right at 50. Excuse me. Interesting that we gapped up to right where I kind of had projected as, and that's just a round number. That's based on Fibonacci numbers, sequence of numbers. So like the 1, 2, 3, 5 type thing. But anyway, so we did have a gap up there. Tomorrow is a sell day on my books. And that's because we had this 2-period rate of change flip down. So we flipped down in the 2-period rate of change, but yet we made a high, closed on the high there. So that flip down in the 2-period rate of change does set us up for a sell day tomorrow potential. Now keep in mind that may or may not come first thing in the morning. So a couple things I'm looking at. We did gap up here. If you look back on a 15-minute or even 60-minute, doesn't matter. Any chart where we gapped up, from here. What would this close at? This closed at close 72, and the next day we opened up at 95. So 20-point gap or so. I think the gap we had last, from Asia's opening here is a little over 20-point gap. You'll notice that, if we have a 20 or 20 plus point gap, we don't always come back and fill it immediately. So like this one, the first 60 minutes, so this is a 60-minute chart. First 60 minutes, we pushed all the way up here, a lot higher before we finally came back down and didn't do a full fill from where it closed, but we did touch that last hour's highs. So anytime you have a significant gap up, like I said, over 20 points, you may not fill that immediately. Like basically don't expect that immediate, push down and come back down. Now this day we did. So we closed here at, come on, give me the data, people. Closed at 6307.50. We opened up at 6338. Well, that was a huge gap. So 0750 to 6338. It's almost 30 point gap there. Then we just kind of came back down. So you'll notice kind of a theme that a lot of them you don't always get that immediate turn back down. So I want to be aware of that in the morning, that it could not, but don't get too bearish right off the start. In other words, looking for that short that may or may not come until later in the afternoon. Especially with the large gap up. Okay. All right. So that's kind of what I've got there. Couple things that I'm looking at tomorrow is I'm looking at the so let's jump over here to my time charts. Pull this over here. So on my time charts here, the 15-minute, you see that this was Friday's close here, and then this is Asia's open. This candle right here did print a Keltner channel reversal. So we had the first 15 minutes, the second 15-minute of Asia opening. So this did, let's see, where's that? Well, here. Oh, 45. So 64.45 is that Keltner channel reversal. So far, as of right now, we have, we've not violated that setup because we have not gone out and taken up that high up there. So that could still yield a retracement back to means here on the 15-minute chart. I'm looking for that on the 15-minute. I'm also looking on my 60-minute to see if we do have any Keltner channel reversal set up in the 60-minute as of right now. Again, we opened up, came down close. So far in the second 60-minute segment here, we're pushing back up. So I'm going to be looking for if we have a 60-minute Keltner channel reversal, and as well as a 15-minute. I'm also watching the 65,000 ticks because that's more, price related there versus just time related. To see, you can see here on that we have that same gap up here. I'm seeing if we have that Keltner channel reversal on the 65,000 tick chart. So again, I'm watching the 65,000, the 60-minute, and the 15-minute in the morning, as well as the direction of the internals, and see what they're telling us for my plays in the morning, to see if there's anything that sets up. And if not, if we still have further continuation of the upside first, then I will be certainly looking for those type setups and plays into the afternoon. So that's all I have for now. All right, guys, it's a Monday. Keep in mind it's a Monday trading environment, so let's treat it as such. All right, we'll talk again soon.